People focus on the US. Without that monetary policy normalization, or the starting of that in Japan, that Black Monday, 5th of August, wouldn't have happened. So Japan was extremely important. So it is not over. It's really not over.
A stock market roller coaster ride and a quick recovery. After last week's Black Monday, global markets are in rebound. But could it happen again? With me here to take a look at Japan's role in the topsy-turvy is Alicia Garcia Herrero, Chief Economist for Asia Pacific at Natixis. Alicia, on August 5th, the Tokyo Stock Exchange experienced its biggest one-day loss in history. It fell by more than 12%. How did we get here?
Well, it was a combination of many factors. Some were actually coming from the US. US employment data the Friday before was very negative, and we started hearing about a potential recession in the US. And that related to perhaps much faster cuts by the Fed, which are extremely relevant for the story in Japan, all the way to Japan, because Japanese investors, given the fact that they had been basically with zero rates, if not negative, for 18 years, for years, they piled up positions, basically borrowing in yen at zero cost, and investing in high yield, in high return investments all over the world, especially in the US. And all the more so recently because US interest rates went up massively. So that was the carry trade. The carry trade was just, borrowing yen and invest in dollar. And what happened was that, given the fact that the Bank of Japan had hiked rates right before that date, on the 31st of July, there was less of an incentive to stay in dollar, especially once you saw this very negative data from the US, knowing that the Fed would cut rates. So back to the yen, and that's the so-called unwinding of carry trades globally. And that was the reason why not only the stock market collapsed, and I'll explain that in a minute, but because that was the reason why the yen appreciated massively all of a sudden on that Monday, even before that Monday, to be frank. And why the stock market collapsed then? Why didn't they go to yen and the stock market in Japan? Because that stock market had been going up for literally 2 years. It was at record high. And everybody decided to go to fixed income in Japan, to Japanese government bonds, rather than stock market in yen. So two things happened. The yen appreciated, the stock market collapsed, and the yield of those government bonds in Japan went really down again, which is kind of crazy. But that was really what, the other side of the story. People focus on the US. Without that monetary policy normalization, or the starting of that in Japan, that Black Monday, 5th of August, wouldn't have happened. So Japan was extremely important.
Right. So just to summarize, the yen had been attractive for carry trades because it was a stable currency with zero and below zero interest rates, as you mentioned, for over a decade, for 18 years. Then in March of this year, the Bank of Japan, the BOJ, started raising rates, and it raised them again on July 31st. Now, does that mean a scenario like we saw last Monday could play out again if the BOJ raises rates again?
Yes, because there is still, and this is the Bank of International Settlements own calculations, at least 40 trillion in yen positions, short positions. Yeah, so Japanese investors overseas, mostly in the US, also Australia, in some cases in emerging economies, which need to be at least partially unwound. So it is not over. It's really not over. Of course, the combination of bad news in the US and this push from Japan at the very same time might not be repeated depending on US data. But the Japanese story is still there, and a lot of money needs to go back to the yen. So yes, volatility will be very strong, especially for those currencies which were the carry trade objectives for Japanese investors. So Australia, Mexican peso, beyond the dollar.
Right, yeah. So these other countries that are being affected by Japanese carry trade mania, so to speak, what's in store for them?
Well, the more these central banks start cutting rates like the Fed, the harder it will be, because Japanese investors will have more interest in unwinding those positions because there's no longer money to be made. The stronger the yen appreciates, there's less money to be made because you want to go to the strong currency, yeah, rather than a currency that might be weaker, because those central banks, the RBA in Australia, Reserve Bank of Australia, or Bank of Mexico, will be cutting rates. So it's the combination of the two. How fast the BOJ goes, how much these other central banks start cutting rates. The BOJ is trying to help. Good news. Because they understand that this is a big problem that they're causing, because they need to move out of this lax monetary policy. So the BOJ, in an emergency meeting right after that Black Monday on Tuesday, the Tuesday after the 6th of August, announced that they would not hike rates again if the conditions don't warrant it, which means if there's the yen appreciates too quickly, if these positions, carry trade positions, are unwound too quickly, they will not help. They will not tell the market, I'm hiking rates again. So that's how the BOJ is trying to make this process smoother, slower than it would have been otherwise.
Right, so slowing down the process, but what you're saying essentially is that what happened last week isn't just a blip, but more of a systemic issue.
Yes, maybe the blip is, like 12% plummeting stock market in Japan. Maybe that's, it's hard to imagine that's going to happen every week. But the idea of a stronger yen and volatility, because these carry trades need to be unwound, hitting other markets, yes, that's here to stay until the BOJ finds its way to guide the market so that it is done very, very slowly. It's not easy because the positions are humongous. When you've been doing something for too long, this is Japan's expansionary monetary policy, much longer than the Fed, much longer than the European Central Bank. Undoing that won't come at no cost. It's just simply not possible. So yes, we will see some hype in some markets related to Japan moving out of very lax monetary policy. There is no way out than some volatility, hopefully not as much as that Black Monday.
Now, regarding hikes, you've mentioned Mexico, but what about other Asian economies? How have they been impacted and could be impacted by these developments?
So the yen, interestingly, has been another funding currency. So actually like the yen, meaning funding in RMB to buy high yield in the US. Of course, the positions are much smaller to start because China has capital controls, and there's not so much money that has actually left China as opposed to Japan. But this is why the RMB, if you noticed, appreciated on that Monday, like the yen, because some of those positions were being unwound as well. But I would say for the RMB, the risk of a disruption is small because it's a very protected market through capital controls. Mexico is big, and maybe even the Aussie dollar. These two currencies are really carry trade. So on the other end, the Japanese have invested in Mexican peso. They have invested in Australian dollar. And now these central banks, especially Mexico, start cutting rates. So they make it easier. Why would I stay if the rates are lower? So that will speed up this process, if you see what I mean. The RBA did not hike. We just had a meeting, and we expect the RBA to maybe cut in October. So if that expectation gets confirmed, I would also imagine that there will be exit from that market, quite destabilizing. But we're not yet there, and central banks are learning. They saw what happened on that Monday. So the BOJ is learning. I'm sure Banxico in Mexico is learning. RBA they're all learning. They will find a way to make this less abrupt, hopefully for us.
Alicia, thank you so much for speaking to us.
Thank you.